Good afternoon, I'm Paul Sanger for the Finance News Network and welcome back to The Last Word. On The Last Word, myself and my guest Chris Goslin, we will talk about the major events that have been shocking or in the market this afternoon. Chris, it's been an incredibly busy week, lots going on. Let's run through what we think is our key takeaways, shall we?
Sure. Look, it has been a busy week. It's been dominated by politics, hasn't it? US politics in particular. That's just been a circus for a couple of weeks. Donald dodged a bullet for democracy, even.
Well, he did, and obviously the big talking point is that obviously Biden isn't going to step down from the re-election. By de facto, Kamala Harris is kind of been on TV for the last 3 days solid, although it's no certainty that she'll be the nominated person to be re-elected. Yeah.
I'd be very surprised if she didn't get the nomination. Enough people have got behind her, and I think the Democrats have really been in disarray thanks to Joe Biden just refusing to go.
Yep.
He was, the last person to realise it was time for him to go. So there was a few days where it looked as if that was going to be a bit dodgy for her, but I think they're all going to get behind her. And I think it'll make a much closer competition as a result on election day. Bear in mind that there's no compulsory voting in the States.
That's true, yeah.
So if you look at the UK, you had just over 60% of the voters turned out, and the government won with a landslide, the new government won with a landslide, with something like 32% of the popular vote.
Yeah.
So in that system, first of all, first past the post, and secondly, no compulsory voting, you can get surprising outcomes based on who's motivated on the day. And in the States in November, what's the weather like? You get a blizzard, you're gonna change US politics for the next 4 years.
No, absolutely. Well, let's move away from politics. Now, at the beginning of the week, obviously this big the cyber security thing that happened over the weekend, CrowdStrike with the company, and I understand that it's affecting roughly 8.5 million Windows devices. And apparently Fortune 500 companies face an estimated 5.4 billion in losses. Pretty big, huh?
I don't know how they actually calculate that, but someone's obviously got a calculator in there and they're saying this is what it's going to cost. It does show our dependence on big tech.
Absolutely.
So this is Microsoft. It affected Windows computers.
Yep.
So if you didn't use Windows computer, you're okay. A lot of servers are Windows orientated, Microsoft. It does really focus on the concentration risk of technology, and then people start talking about AI. AI is here to stay. People who dismiss AI as just being temporary or overly concerned about the negative sides of it, AI is certainly here to stay, but the whole thing can be brought down by a cable being cut, by a piece of software going wrong. And this wasn't even hacking. No. This was a piece of software going wrong. So there's a human element in there.
Pretty scary. And let's one of the big focuses this week has been corporate earnings. Major companies across sectors reported this week. Tech giants Apple, Microsoft, Google, kind of mixed results, and others missing earnings. Financial institutions, major banks, JP Morgan, Goldman's posted really strong earnings, but really the focus was on the what we call the Magnificent Seven fallout. And I think there was an ETF, the Round Hill Magnificent 7 ETF, suffered its largest daily decline on record on Wednesday. What's happening? Is the market falling out in love with these companies?
I think there's maybe a bit of common sense coming in there because the valuations have been huge. Now, different from previous tech booms or the 1999-2000 tech boom, this tech boom has been based on earnings. So these companies, the Magnificent Seven, are extraordinarily profitable. And so it is based on earnings. So it's not sort of all based on a mirage as it was previously.
And some would say they were priced perfection. You don't follow through with the results.
Sure, and that's what happened. Look at Tesla. Tesla absolutely missed.
We'll get onto that in a second.
So you know, we are seeing a rotation because I think people are taking profits. You know, Magnificent Seven have significantly outperformed, and maybe investors are sensible in saying, well, let's take some of that risk off the table.
Yeah, and there's a stat here that all that said, this group is still expected to report that aggregate second quarter earnings grew 3 times faster than the S&P 500 as a whole.
And this is earnings, as I said, alluded to before. This is not sales, this is earnings.
Correct.
So it's flowing to the bottom line.
Now, the other sector that's been under the pump, it's been a terrible week for car stocks. Rising inventories was a real problem for some of the brands. Tesla and Ford had big earnings misses. What's going on here?
Well, is Tesla a motor vehicle stock or an automaker, or is it a tech stock, or is it a battery stock, is it an energy stock? I mean, it probably depends what Elon Musk wants it to be in his next tweet or his next whatever it's now called. The key is when Tesla is most visible, it's driving around the street, it's cars, but they're also into batteries and space and energy storage, etc., etc. The car side, whether it's robo-taxis or trucks or whatever it may be, is the one that grabs the headlines, and therefore that affects the share price when they miss their earnings. Tesla have been dropping prices on their vehicles. Sales have been down. They're under a lot of competition. Time will tell whether Tesla or Elon Musk is all talk or real, and I think that's just going to take a while to play out. He's getting a lot more competition from the Chinese, from the Europeans. He was certainly first mover advantage, and he's got the gift of the gab, certainly.
Well, you say that. I think in the post call to investors, he stood up and said, if you don't like the stock, sell it, and that's exactly what they've done.
Yes, I mean it's you're tempting fate, really, aren't you?
Oh, absolutely. Let's just move on to commodities. Has been again another focal point. You know, copper had its biggest weekly loss, I think, since 2022. Iron ore slumped below 100 US bucks a ton. Iron ore's plummeted 25% this year, due to the global surplus. China's going to be playing a part in this, and maybe with the copper price, with AI. Is that related to the falls this week?
I think China's the big key here. Yep. China is a major user of all commodities. It's also a producer of these rare earths, but when you look at demand for copper, and the demand for copper is huge, so it has always been volatile. But China are missing their growth targets. The Chinese economy, is no surprise, is under pressure, not only in the property sector but general IP production. So inevitably, commodities are going to suffer along with that. We're seeing iron ore commodities, which really affects us. We're seeing copper. I think the underlying strength of the copper market will see the price fluctuate, but it's a key component. We did that interview during the week with Argonaut in Western Australia, and copper is integral to the world's future. So it may well fluctuate, but it's not going away because they haven't got an alternative for it.
I'm certainly more optimistic in copper than probably iron ore based on that. And let's talk about the M&A deal of the week. Woodside to buy Gulf Coast LNG for $900 million. And this is a theme in this sector. We've seen a lot of oil and gas M&A going on. Do you think it continues?
I think it certainly will continue if Trump gets back in, going right back to the beginning of this segment. Trump at the Republican nomination, he said it on 2 or 3 occasions, drill, baby, drill. So that oil and particularly gas sector is, under Trump, going to be very active. Where you've got that kind of activity, you're going to have M&A activity as well.
Yeah, okay. Right, and talk to us about the economic data this week. What's happened, what's coming, and what lies ahead?
It looks as if there's a rate reduction coming in the US because depending on how the numbers come out, I think it's tonight, then you're going to see some, according to the expectations, some positive news on inflation. If you see that positive news on inflation, the Fed has indicated they're closer to dropping rates
I think it's
later, maybe September,
I think
maybe August.
94% chance people
Sure.
think that it will happen in September.
Sure, which is very different to here.
Correct, absolutely.
That's the real, for a lot of locals in Australia, what's going to happen, because unless inflation, I think our inflation figures come out next week, unless our inflation drops shortly, and quite quickly, we've got every chance of seeing a rate rise in Australia. So bye-bye your tax cut, that's going to go into your mortgage.
No, absolutely. And you're right, we've got the market is very cautious ahead of tomorrow's core PCE inflation report, so that's something to watch overnight. On the jobs front this week, jobless claims came in lower than expected, 235,000 versus 239. And the consumer confidence index showed a decline, reflecting consumer concerns about inflation and the economic outlook. In Europe, the Eurozone inflation data revealed a slight decrease, providing some relief to European central bank amidst a tightening cycle. So getting a little bit better over there.
Yeah, I think what we're seeing is this sort of soft landing. I mean, that's the Goldilocks, and they get a soft landing. If the US Fed and in Europe, they can engineer, and it has been engineered, a soft landing, they will have done a terrific job. In Australia, sadly, inflation is stickier and their path is narrow. And the central bankers love using this term of the narrow path, but that's becoming very, very narrow indeed. I think they've done it, by the sounds of it, in the US. We'll see overnight and next week. We'll have to wait until the week after before we see the Reserve Bank making any decision or any comments about what's been happening in Australia.
And look, my sort of final comments on the markets. It's been a tough week in the markets. Again, the small caps continue to outperform. The Russell 2000 is on track for another healthy weekly again as we continue to see this sort of rotation. So we're very interested to see next week whether that trend continues.
Sure. Next week's always interesting, Paul.
And to finish up, obviously, the Olympics starts tonight. In fact, it's already started. We just haven't had the opening ceremony. Bit of a shame for the Matildas. Wasn't the start they were looking for? The
Matildas didn't do very well at all. 3-0, I think it was. 3-0 or 3-1. I didn't get up to watch it, but the one thing over the next 2 weeks is going to be a lot of tired eyes, sleepy eyes, slow people coming into the office, and a lot of caffeine drunk, I would imagine.
Absolutely. And again, I think the highlight overnight was the men's sevens teams who are now in the semi-final. And
yeah, they did well. So the sevens team did well. They had 2 wins in the first day. They're now into the difficult bit.
Well, they've got the Fijians. No easy task there.
They've got the Fijians in sevens, and I think on the other side there's maybe South Africa. That's when they're going to have to really.
South Africa, France, it is, yeah.
South Africa, France. Well, France at home. Interesting.
We will see.
It'll be good watching.
All right. Well, that's all we have time for. That's our last word, our weekly wrap. We'll be back next week for another session. Thanks for your time.
Thanks, Paul.